I'd like to invite, we have with us Mr. Prashant Shah, Managing Director, Head Banks and Broker Deals, South Asia and Country Head Financial Institutions, India, Standard Chartered Bank, who will be spearheading this particular session. Can we have a round of applause? And I'm sure all of us are eagerly waiting for our very special guest to join us, who's joining us virtually live. We have with us none other than Shri Jayant Sinha, Member of Parliament, Lok Sabha, and Chairperson, Standing Committee on Finance, Parliament of India. Can we have a huge, huge round of applause to also welcome Shri Jayant Sinha? Thank you very much, sir, for joining us virtually, but joining us live. Thank you very much for being part of the Global FinTech Fest. I request Mr. Prashant to take it over from here.
Thank you for the introduction, and good afternoon all. Targeting a $10 trillion economy is quite an aspiration, but so has been the pace of change and growth that fintechs have delivered, especially over the last 5 to 7 years, which has been significant. When I joined the banking industry at the turn of the century, electronic clearing system, ECS, was just about picking pace, but money transfer, money movement was still largely paper-based. And then came real-time gross settlement, RTGS, where I had the privilege to be very closely associated with, as Standard Chartered was one of the 4 banks that was nominated to do the UAT. And I spent good 6 months with Reserve Bank of India testing the system out. And we thought that was revolutionary. But that was 2004 when RTGS came in. And today, India's fintech have transformed the payments dramatically. So coming back to the $10 trillion economy, to throw light on the same happening in the near future, aided by fintech innovation, we couldn't have asked for a better person than Mr. Jayant Sinha to take us through the possibilities. While Mr. Sinha is an extremely well-known, versatile personality, and most of us are well aware of his illustrious achievements, let me highlight, prior to his career in public service, Mr. Sinha has made venture capital investments in 2 fintechs that have gone on to become unicorns. So he does have an eye to pick up winners. Mr. Sinha is a second-term member of parliament from Jharkhand and currently chairperson of Standing Committee on Finance, where he leads a 31-member parliamentary panel that has oversight over Ministry of Finance, Corporate Affairs, Statistics and Program Implementation, and Niti Aayog. Previously, Mr. Sinha has served in India's Council of Ministers from 2014 to 2019, first as the Minister of State for Finance, and then as Minister of State for Civil Aviation. Mr. Sinha is an MBA from Harvard Business School, an MS in Energy Management and Policy from University of Pennsylvania, and BTech from IIT Delhi. Prior to joining public office, Mr. Sinha was a partner at Umedyar Network. He was the managing director of Courage Capital Management, where he led the global technology and India-related investment for a $1 billion special situation hedge fund. He's also worked for 12 years with McKinsey & Company as partner in the Boston and Delhi offices. So thank you, sir, for joining us today. Fintech will definitely be one of the key drivers in India's journey towards a $10 trillion economy. India's fintech landscape has transformed dramatically over the past 5 years. But despite this explosive growth, certain segments of the market remain underpenetrated, and there is considerable room for growth. Will the next wave of growth come from tier 3 to 6 locations? Or will it be the MSME, where almost 35 to 40% of the lending demand are still unmet? While there has been a stellar growth in the number of demat accounts opened, the demat account penetration is still relatively lower as compared to some of the other advanced economies. Insurance continues to have lower penetration as well. But with the emergence of new technology, Indian fintechs are well poised to harness this massive opportunity and make a dent to be one of the key contributors in our journey to the 3rd largest economy. This session couldn't have come at a better time. We've just overtaken UK to become the 5th largest economy. But if you look at it closely, India's GDP has virtually doubled since the year 2000 in every 7 to 8 years. We were a 500 million nominal GDP in 2001, became $1 trillion in FY 2007, increased to $2 trillion in FY 2015, and estimated to be over $3.5 trillion in FY 23. And with the current level of growth, the geopolitical issues, $10 trillion economy is quite an aspiration. But like the famous saying goes, the best way to predict the future is to create it. And perhaps it's the fintech revolution, innovation, that can lead us on that path. And on that note, let me please invite Mr. Jayant Sinha to address this August gathering. Mr. Sinha, over to you, please.
Thank you very much, Prashant. I hope you all can hear me all right. So a very good afternoon to all of you in Mumbai. I join you from Ramgarh, which is one of the districts in my constituency here in Hazaribagh in Jharkhand. So I'm joining you remotely. I wish I could be with you all in Mumbai and to be part of this fascinating and very important conference. But unfortunately, we do have a very busy schedule in our parliamentary constituencies as well. And that's why I cannot join you in person. I'm very glad that the organizers have made it possible for me to be able to join you all in this fashion. So what I would like to talk about today is really where we are positioned as a global economy right now. And therefore, what is it that fintech can do to take where we are positioned right now and really enable us to get to $10 trillion. So I really want to highlight how all of that can be understood given the current very unsettled global environment that we are facing right now. But the first thing I want to mention to you all is to tell you that India right now is a haven of macroeconomic stability. In a very turbulent global environment, we have an economy that, unlike most other economies, is able to deliver both relatively low inflation, which is running at 6 or 7% in India, in a very, very high inflationary global environment, and at the same time high growth. So all projections are that our economy in this fiscal year will be growing well over 7%, and that we will be able to sustain this level of growth, this 7% level of growth, 6-7% level of growth into the foreseeable future, while we will be able to bring our inflation down substantially and bring it down into the target range that the RBI has been set, which is 4 plus minus 2%. So even as the world is going through very difficult times, advanced economies are seeing inflation at levels that they haven't seen for 40 years. The United Kingdom is expected to have inflation in the 15 to 20% range later on this year. The US is grappling with inflation at 8.5% inflation that advanced economies have never seen before. We are still, despite the energy shock, despite the supply chain disruptions associated with the pandemic and with the Ukrainian conflict, are still able to maintain our inflation at a reasonable level, and we are managing to keep it under control. Along with that, because of our very substantial foreign exchange reserves, as well as our stable macroeconomic parameters, whether it's the fiscal deficit or the current account deficit, in a world where there's tremendous uncertainty, tremendous instability, India is coming through as a haven of macroeconomic stability, which is really, really positioning us very well. Along with that, what we are finding now is that countries are trying to build resilience in their supply chains, and they are absolutely looking for alternatives for China in terms of their supply chains. So the China plus one supply chain strategy that large corporations are pursuing right now are also a great tailwind, is also a great sort of opportunity for India as well. So not only do we have very stable macroeconomic parameters and our growth remains strong and our macro picture looks even better going forward, we are also benefiting a great deal from the China plus one migration of value chains from China and countries like that to India as well. So the first point that I think you should all feel very good about, and which really is the foundation for our growth going forward, is that we are a haven of macroeconomic stability and extremely well positioned geopolitically. That's the foundation we have to build on. Now, as we look towards the future, as we think about how we are going to achieve a $5 trillion economy and a $10 trillion economy, what I want to mention to you both, all of you, is that we have two major drivers, and fintech has a very important role to play in both those two drivers. We have two very important drivers that are propelling our economy forward. The first very important driver is digitization. So if you look around the economy right now in India, you'll find that many industries are digitizing very, very quickly. You may have capital assets, you may have physical assets, but on top of that, we are adding a layer of software, we are adding a layer through the Internet of Things, where digitization is enabling us to use our capital assets a lot more productively, a lot more efficiently. We are able to track these assets, sweat them a lot better, and at the same time, we are able to provide new and innovative pricing and solutions that we could not provide earlier. So digitization is really a massive driver for the economy, and this digitization is built on a tremendous wave of fintech innovation that we've had, and that is largely because of India Stack, what we've done with respect to payments, what we're doing with respect to ONDC, and what we're doing with other associated stacks, such as, for example, the healthcare stack that's being built in conjunction with the fintech India Stack that we're doing. So the digitization that our economy is going through, the productivity impact of that, and the ability to be able to make things happen much more faster with much less friction is a major driver for our economy going forward, and a major driver for our productiveness and for our competitiveness. And as I said, fintech's contribution to this in terms of the India Stack, in terms of payments, in terms of financing solutions, in terms of being able to track capital assets, is incredible. Let me just give you an example of how this is working out, let's say in the airline industry. In the airline industry, because of the excellent financing solutions that leasing companies are providing, we are able to variabilize the cost of a $300-400 million plane and enable it to be leased out on a monthly basis. And once you are able to lease out planes on a monthly basis, you bring down the barriers to entry, you bring down the cost of getting going, which is, for example, how companies like Akasha Air have gotten going. And at the same time, you're able to price very efficiently using yield management and other pricing solutions so that we can reduce the cost of flying dramatically. So this is the place where, again, the fintech solutions that we're providing on the leasing side and on the consumer pricing side enable us to take an industry like aviation and really drive it forward because of digitization. So digitization is one very important driver that is enabling us to grow very, very quickly and move to a $10 trillion economy. The other very major driver that is going to unfold over the next few years is decarbonization. Decarbonization. It's absolutely necessary and inevitable that India will decarbonize vast sectors of its economy, whether it's cement, steel, fertilizer, transportation, power, real estate. All of these different industries, all these sectors of the economy have to decarbonize so that we can get to net zero by mid-century. The Honorable Prime Minister has already announced that we want to get to net zero by 2070. And many major corporations, whether it's the Tata Group, Mahindra's, JSW, all of these are working towards achieving net zero in their operations and also benefiting from what's required to achieve net zero, whether it is electric mobility, whether it is green hydrogen, whether it's solar and renewables. There is a vast wave of investment opportunities that is happening because of decarbonization. Now, to achieve net zero, to be able to decarbonize the economy, fintech has a crucial role to play. Fintech, again, building on the example of the airline industry, can take capital assets, can enable through the leasing and pricing of capital assets, very low barriers to entry for competitors, as well as to come up with very good pricing solutions, and I'll give you an example of that. And at the same time, makes it possible for the intermediation to happen, so that hundreds of billions of dollars of capital every year can flow from capital providers to companies that are actually decarbonizing. And trust me, because we've done a lot of work on this whole question of decarbonization, of achieving net zero, we are going to have to invest hundreds of billions of dollars a year to be able to decarbonize, to reduce our carbon emissions. And that intermediation function, that efficiency that digitization provides you, can only be delivered through our fintech companies. And let me give you an example of that. You're probably familiar with what is happening with battery swapping companies. So today, auto rickshaws that are electric are much, much cheaper to operate than auto rickshaws that are running on petrol, because electricity is much more efficient, much cheaper, and the capital costs now of electric auto rickshaws are pretty much similar to those of petrol auto rickshaws. And because the costs of operating are much lower, today the cost of operating an electric auto rickshaw is about 1 rupee, whereas the cost of operating a petrol or a diesel auto rickshaw is more like 4 or 5 rupees. So it's much, much cheaper to run electric auto rickshaws. But to run electric auto rickshaws, we have to be able to create battery swapping networks. We have to finance both electric rickshaws as well as batteries, and for that we need to do leasing solutions of various kinds. And we need to be able to have very simple payment solutions so that when you get into an electric auto rickshaw, you can use the India stack to make a payment, to use any of the UPI softwares to be able to very quickly pay for your auto rickshaw, pay 10 rupees, 20 rupees, 50 rupees for your ride. And that automatically gets credited to the auto rickshaw driver as well as to the leasing company that's leasing the auto rickshaw or leasing the battery. So by using fintech, we can make a massive, massive disruption happen, which is the decarbonization of transportation, whether it's through three-wheelers or whether it's through four-wheelers, through companies like Blue Smart and others. So digitization and decarbonization will be the big drivers of the Indian economy as it moves towards 5 trillion and 10 trillion. Hundreds of billions of dollars of investments are going to go into that. But to make it happen, unless our fintech companies come up with innovative financing solutions, innovative billing and pricing solutions, and innovative intermediation capabilities, it will be very difficult to take the hundreds of billions of dollars that capital providers can give us and be able to provide it to companies and to consumers.
Digitization comes to mind, payment systems comes to mind. Decarbonization is something that, you've brought in an element, and like we make our journey towards a green world, net zero. I think fintechs have definitely a greater role to play there as well. But sir, given, your role...
So Prashant, let me just interrupt you for a second. Please don't underestimate the importance of decarbonization. Climate change is an existentialist issue for humanity. If we are not able to control global warming, we will find it very difficult to grow. You have just seen what has happened in Pakistan, where a third of the country has been flooded. They have suffered damage between $30 to $50 billion, and this has really set back their growth. It has set back the future of the country. So therefore, unless we are able to very aggressively move towards decarbonization, and as I said, fintech has a very important role to play, it's going to be very difficult for us to sustain the 6 or 7% growth that we require. And that's why I always say net zero is net positive. Net zero is net positive because the alternative is too frightening and too scary to think about. So we have to decarbonize. Decarbonization is as important, if not perhaps more important than digitization as well.
No, absolutely, sir. And it's a similar trend in banking too. Sustainable finance is becoming a big topic of discussion. And like we say, there's no choice but to adopt. So given your role, as a policy maker, I'm taking the liberty of asking a question that's going to be on minds of a lot of people here. Is, what is the level of policy intervention that is desirable? Like on one side, you have to promote growth, innovation in the fintech industry, but yes, it has to be balanced with various concerns like financial stability, cybersecurity, data protection. So the classic innovation versus intervention. But if fintechs were to be a major driver, what sort of policy intervention is desirable from a government perspective?
That's a very dynamic and evolving question, because every situation requires a different policy response. And as policymakers, we always have to balance stability, regulation against innovation and growth. So that is the continuous dynamic process that goes on as a policymaker. And we've just confronted that, just a few months, a year ago, which is around crypto finance. And as when it came to crypto, there was a lot of momentum behind pushing crypto and having many different types of crypto instruments in India. Obviously, as policymakers, we wanted to understand what the risks were, what the challenges were if we were to do this. Issues around security, issues about over-investing and having a bubble as a result of that, issues around dollarization of the economy. All of these were considerations that had to be balanced along with the innovation potential that comes from crypto. So you had a live example not so long ago where we had to balance the questions of regulation and stability with the questions of innovation and growth. And I think the government got it exactly right. We've, of course, talked about digital currency. We've, of course, talked about ways in which we can make it possible to look at some innovations that are coming through from blockchain technology and so on, while at the same time ensuring that we didn't take unnecessary risks when it came to crypto finance and crypto instruments. So, as I said, policy making is a dynamic process. It depends on circumstances, it depends on what the issues are and the challenges are, and therefore it requires continuous attention and continuous interaction between industry and policymakers to be able to get the balance of regulation and innovation right. And that's essentially the process that the government and regulators like the Reserve Bank and Security Board of India constantly follows. It's a right answer. It is very circumstantial. It pretty much depends on the issues that you're looking at, the risks and challenges associated with that set of issues.
Sorry, do we have the connectivity? Sorry, apologies for that break. I think he's back. Okay, so yeah, we're just trying to establish connectivity back with him. Like you mentioned, he's in a remote area in his constituency, so just give us a couple of minutes, please.
I hope you all can see me.
Mr. Sinha, we can hear you, but can't see you as yet.
Okay, so let me stop the video. Maybe that's better. Can you hear me still?
Yeah, we can hear you.
Yeah, sorry, apologies. As I said, I'm in Jharkhand and the connection here is a little unstable.
No, understand that, sir. You can hear me, sir?
Yes, I can hear you fine. Yes.
Okay. No, so I get your point. Yeah, it's always going to be dynamic, innovation versus intervention, and that's a classic debate that will keep going. I'll move to my second question, sir, and this is more to do with the aspiration to become a more $10 trillion or the third largest economy in the world. If I look at banking, we only have one bank in the top 50 by asset size. If I look at market capitalization, we have 4 banks there in the top 50, but none in the top 10. So what kind of ecosystem should we be creating to encourage more innovation and achieve global scale? You mentioned China plus one, the top 5 banks by market cap are Chinese. So, would like to hear your thoughts on that in terms of what more should we do to create global giants. And a corollary to that question is also like to hear your views on the need for big techs or the equivalents. There's a constant chatter to rein them Oh, he's left the call. Okay, sorry. Yeah. Sorry, he's again dropped off. When did it? Yeah, meanwhile, I think because of the connectivity issue, are there any questions that the audience would like to ask? I can just take them and then put it on to him if he comes back.
Hi, I'm Somnath Audi. It's very interesting to, it's here, yeah.
I'm trying to get
Hi.
him back.
While we are, looking at a very aggressive plan of moving to a $10 trillion economy, and we recently proudly overtook UK. But if you see the GDP per capita, that's about $2,000, while UK has around $40,000 of GDP per capita. So yes, growth is happening, but probably we should also have a target of putting GDP per capita of $20,000 from $2,000 while we move to a $5 trillion economy. That will lead to inclusive growth, and probably we would like to know from Mr. Sinha, like what suggestion will he have for the fintech industry so that we can promote inclusive growth into the country and the poorest of the poor gets the benefit of the growth pie. So that will be very interesting to know from him.
Sure.
Thank you.
Thank you.
Hello. Sorry, at the back.
Sorry, I'm yeah, you can go on, please. I can't
All right.
cite you.
Shubham this side from Kotak Bank. So first of all, I fully agree to the point that we need inclusive growth with decarbonization in our minds as well. One of the problems that the whole country and the world is facing is the concentration of wealth among the top 1% or 5% of the population. So my question to Sir is how the government foresee fintech to solve this problem, and is there any framework the government is currently working on to solve this problem of concentration of wealth? In the past 2 years, we have seen this wealth gap increase to a significant level, and we have certain examples in the Forbes list as well. So would like to know the inputs from Sir's side. Thank you.
Sure, thank you.
Hello, sir.
Okay, sure. Okay.
Yeah, I can hear you.
Yeah,
Ishita.
please.
Hello, sir. This is
Hi, he's
Ramakrishnan
trying to join in.
from IIT Kanpur. So, when we say fintech and about the
Sir, told
financial inclusion, both move
them to
together
hold on.
parallelly. So, is it that fintech promotes financial inclusion or financial inclusion promotes fintech? Actually, this is both ways, both are interdependent. But the thing is, when we say we are taking technology to the rural areas, there is more need for an awareness, because even till now, the rural areas are in the where people lack awareness. So the important aspect of taking technology along with finance means that we need to educate them. We need to build the trust in them on this technology, which is more important for taking, as they said, for an inclusive growth or reducing the income inequality, as our fellow brother said. So how, sir, I just want to know his view from, his view on this.
Sure, thanks. I think we'll hold on because we're still waiting. Okay.
Well, looks like tech today was being or playing the role of the genie that said you only have 3 wishes, and now you run out of 3 wishes, so I'm going to be out for some time. But that being said, I want to thank everyone for your patience. While we're still trying to get Shri Jayant Sinha back again online with us, we're trying our best, but let's see if that works out. That being said, while we did take a couple of questions, while Mr. Prashant has already noted down these questions, we will also try to share these questions with Shri Jayant Sinha after the program, so that we can, if it's possible, we can probably share his thoughts with the audience on LinkedIn or any other relevant platform. So that's something we are definitely looking forward to. And that being said, Tech has decided to ensure that the conversation continues. So once again, we have Shri Jayant Sinha joining in back. And Prashant, let's take it back to you.
Hello. Sir, can you hear us?
Yes, I can. Sorry, apologies, Prashant. My Geo network hung up, so I had to switch to Airtel. So I took on a different hotspot. Apologies for that. Apologies for those technical glitches.
No, so thankfully, we are in Geo house as well. We don't have to shift to Airtel, so that's good. So what we did is, if I can continue with my question, right?
Yes,
I don't know if you picked it up. Okay, so I'll restart that. So, like I said, what we are trying here is to be targeting an aspirational $10 trillion economy. If you look at the top 50 banks by asset size, India just has one in the top 50, and that's about 42nd number. If you look at top 50 by market cap, India has 4, but none in the top 15. And you referred to China plus 1, which is what our target is. Chinese banks are the first 5 in, by market cap. So what kind of ecosystem should we be creating to encourage more innovation and achieve global scale? And further, I would also like to hear your views on the need for big techs and equivalents, as there's a constant chatter on the need to rein them. So how do we achieve scale if we have to achieve or be the 3rd largest economy? And your views on big tech as well.
So intermediation, financial intermediation is a vital aspect of a growing economy. And if financial intermediation, whether it is from existing financial institutions or innovative new fintech companies, if that's not happening very quickly, we can't actually grow the economy. And so it's very important for our financial institutions to get bigger and stronger, to have a much stronger equity base, so that they can lend more and that they can bring financing solutions to our economy. I gave the example of electric mobility earlier to show how important it is to have financing solutions to be able to decarbonize. And therefore, we need much larger financial institutions, much more well-capitalized financial institutions that can drive investment, that can drive intermediation, and that can deliver new and innovative financial solutions. And that's effectively what the government has been working to do. As you know, we have been working to consolidate the public sector banks, and we've done, I think, a terrific job as far as that is concerned. We have far fewer public sector banks now than we used to, and they're all now quite well capitalized and doing well in terms of their financing solutions. Because they have also digitized, they've also adopted the latest processes as well. So we've really enabled the public sector to get better. Of course, the IPO of LIC has enabled it also to be able to get more capital and more equity to be able to grow. But at the same time, our private sector financial institutions have to get bigger, larger, more innovative, and that will inevitably happen as our economy grows. And so it's a virtuous cycle, which is that our financing companies provide intermediation capabilities to our economy. The economy grows, our financing companies, financial institutions get bigger, stronger, and then they help the economy grow in turn. So that's the virtuous cycle that we have to enable. And in all of this, as you well understand, we have to be able to manage the level of NPAs, because if our NPAs get up to too high a level, it eats into the capital base, the equity that our banks have, and prudence requires us to be able to rebuild our equity base before we can grow again. And so managing losses, and this is again where fintech is very important, because you can assess credit risk and assess warning signals much better if you've digitized the underwriting function and scaled it up through digital means, becomes extremely important. So yes, we need much larger financial institutions, but I think that will happen as we innovate and as we grow our economy.
Right, sir. And view on big tech?
So big tech is a very important player, of course, as far as digitization is concerned, both in terms of enabling growth for the economy, as well as in providing solutions for fintech as well. And of course, we have some of the big tech companies that are providing platforms as well for financial solutions. So that is also happening. There are major players in e-commerce and in bringing MSMEs into the digital world. So big tech is a very, very important player in digitization. And we have to, again, as we were discussing earlier, balance stability and regulation with innovation as far as big tech companies are concerned. But they have a very important role to play.
Thank you, sir. So while you were away, I just had, few questions from the audience. What I'll do is just kind of club some of them together and, seek your views. So I think a couple of questions were around inclusive growth and, concentration of wealth amongst a very smaller, percentage of people. And they wanted to hear your views on, what is the role that fintech can play in wealth distribution, inclusive growth, and what is the government doing about it?
I mean, the government's every policy is intended to bring growth and jobs and all kinds of benefits to, Aam Janta. And Sabka Saath, Sabka Vikas is all about being able to deliver those benefits to everybody in India. But fintech has a very important role to play, particularly when it comes to the MSME sector. 80% of the MSME sector is still getting its credit from the informal sources, and it's very much necessary for us to be able to bring MSMEs into the digital world, to be able to provide them digital credit and to be able to do much more efficient underwriting so that their cost of capital comes down and that they are able to grow and flourish. And that will really drive inclusiveness, that will drive job creation, that will drive equitable growth very, very quickly if we can get the MSME and if we can get generally the informal sector plugged into the digital world. And that really is going to happen through fintech. So fintech has a very important role to play in driving inclusive growth, particularly by ensuring that the MSME sector and the many, many crores of people that the MSME sector employs onto digital platforms, onto digital services.
Thank you, sir. One last question, and then we wind up. Sir, what do you think are the potential roadblocks in India's journey towards becoming a $10 trillion economy? And this is from a fintech perspective. We have a lot of young entrepreneurs here. We have a lot of young fintech employees here. So what's your message as what's one risk that you think they should be aware of?
My message is go out and innovate. You can conquer the world, and you have, and you will. Because there's just so much talent, so much opportunity, so many amazing things that we can do in India right now. Literally, the sky is the limit. And what we really, really need to be able to do is to understand where are the pain points, what are the requirements that consumers and business customers have, and then come up with really innovative solutions that solve their problems. And that can only come from, innovation. It can only come from entrepreneurs. It can only come from fast-moving, agile startups, both startups that are independent as well as startups within large companies as well. So we all have to have that entrepreneurial, innovative mindset because, as I said, India is a haven of macroeconomic stability. India does have tremendous demographics that are in its favor. The China plus one situation geopolitically is also helping us a great deal. And it is our young entrepreneurs, it is our startups that have really made a huge difference in India's growth, and particularly in fintech, where it really is all about creativity. It's about software solutions. It's about being able to access crores and crores of consumers. That's particularly where our fintechs and our startups have to play a very important role. You've been doing a fantastic job so far, and I'm sure you're going to do an amazing job going forward. Really, I'm not worried about anything right now. I just want to make sure that we can continue to innovate quickly and rapidly, and make sure that there aren't any constraints or challenges that you all are facing.
Thank you, sir. So on that optimistic note, thank you very much for your time and patience, and we'll see you soon, sir.